Okay, so the top 100 U.S. housing markets.
Sure.
What about the 101st market?
We're not sure what the 101st market is because we measured by population and we did not examine past that. But if we rank them, in other words, if we rank these top 100 markets, the city that's the least expensive is Baltimore, Maryland, which is selling for about a 2% premium right now. So it's darn near where it should be in terms of pricing.
So they didn't get the what I call the big hit.
No.
You know, the wealth shot. The shot of wealth.
They did not. In some cities, for example, seem to have learned from last time around, and so people were saying, I made the mistake. I overpaid. And I lost a lot of money in housing the last time. And some cities seem to have learned this to different degrees. So some cities that are surprising in our measures there are Chicago and LA. They're I can't remember exactly, but they're coming in somewhere around 5-10% premiums right now.
So wait a second. So what you're telling me is Chicago, LA, Baltimore. What did those three things have in common that those people didn't profit the way we did in Florida?
They were tremendously overpriced last time around and took a major hit, a major decline in prices.
In 2008?
That's correct. Running all the way down, bottom somewhere, depending on where you were in the country, around 2012. Those cities took some of the largest hits. And think about it, if you're living in those cities, you're saying, fool me once, shame on you. Fool me twice, shame on me.
Or what about supply and demand? What if people just would rather have left there than go there? Maybe that's what's causing the fact that they didn't get the hit.
Well, but you're also seeing that was the hit that's causing them to move, where they lost in terms of wealth creation, where they lost in terms of equity. People probably are leaving. Matter of fact, you can see this in those cities where there's out-migration or their growth expectation is very, very small. Yeah. And so people are leaving. They still have the inventory problem, which I think is propping them up a little bit right now. But you're not seeing tremendous overpricing there.
And what about New York City? What are you seeing there?
Well, the city, our data actually comes from the whole metro New York, and that always confuses people because everybody's mind goes to Manhattan.
That's all the boroughs, Westchester, and Long Island.
19.5 million people that live in metropolitan New York.
Yep.
So in New York, the overpricing is relatively low as well right now. Rents are high. Pricing is relatively speaking low, but New York also took a tremendous hit a decade plus ago. And it's seemingly in some few markets, the places that got hit the hardest, they've learned from that. And they've said, I just don't want to go through that again. So they bargain more aggressively or they're moving on.
I see what you're saying. So we are seeing, a migration away from some of those cities because people have just said, it's not worth overpaying here for, right? I'll overpay what it's worth, or I'll just live somewhere else. Is that what you're saying? I'm
saying there's opportunities and people are coming up and some areas have lost the appeal that they used to have. That's not saying I'm going to say, this is it finally for New York. People have been predicting the crash of New York forever.
It always comes back.
It always comes back to a great degree. But it's just not going to have the same economic punch that it had 20 years ago. And we've been seeing this evolution for years and years and years in the metropolitan area. Atlanta, Georgia, Dallas, Texas, Southeast Florida, other cities around the country are gaining in terms of economic punch, if you will. So much of the financial service business is relocated to Palm Beach County, Florida. Yeah. It seems like every day that we wake up and another hedge fund is moving into Palm Beach County.
I have to say, the weather's pretty good in Southeast Florida compared to New York. I mean, I lived in New York my whole life, and it's pretty cold.
I came here in part for the weather.
Yes,
in part for the
comes here for the weather and the beautiful scenery, and you wake up every day and it's sunny, whereas in New York, it's not quite that way, but New York has an excitement that you cannot replace either.
New York is a world city, and it will not go away overnight. Not that it will ever go away, but there is, on the margin, reasons to live in South Florida or Atlanta, Georgia, as opposed to New York metropolitan area. And some people are taking advantage of that, and that's being reflected in the housing prices at this point in time.
You'd mentioned Detroit. What happened to Detroit?
So We're very worried about cities like Detroit, Memphis, Tennessee, Cincinnati, Ohio, in terms of their population seemingly is either leaving. Our expectations on their population, we pull from several data sources. Their populations are actually either declining or their growth rate is very, very small. As interest rates rise, housing prices will be forced down.
Oh, so you're going to see, I always say all markets are local. I'm always telling everyone,
That's
they
true.
ask me, what's the housing market? Markets are local. Which market? Pick a market.
That's true.
But when you talk about markets, you just mentioned Detroit, you mentioned Memphis. Why Memphis?
Population's leaving again.
What other markets were like that?
Mostly in the Midwest, but Cincinnati.
Cincinnati, you're seeing it too.
Yes, Minneapolis. So you're seeing these Midwestern markets, they are experiencing a significant amount of either a slower increase in population or to an outright decrease. I believe Memphis, and again, please don't hold me to this number, but I think it's 0.1%. The population is expected to increase in the next 10 years. 1/10%.
No, that's not good.
That's not even the birth rate.
No.
So
Oh, that means people are leaving.
that people are
If
leaving.
that's not the birth rate, yeah. Well, you had mentioned Boise, Idaho is the most overheated market, and that was a surprise to me because
Yep.
when you think of like great metropolises, Boise, Idaho is not the first one you think of. So what other type of markets gained like that would be surprising?
So the Austin, Texas is number 2 on this.
That doesn't surprise me though, because Austin, Texas, people talk about, they love that place.
Oh,
They love
absolutely.
going there and-
People love Boise. It's just not getting the same press level
Yeah.
as Austin, Texas. But you can watch Austin, Texas along the trend, and it barely was impacted by the crash a decade plus ago. And it stayed very close to its pricing trend for a number of years. And in recent years, though, it's just started to separate where people are moving in massive numbers. You have the inventory shortage. Prices are going up dramatically. So Austin, Texas is in the top 5. Other cities that you would see in our top 10 most overpriced markets that would be somewhat surprising would probably be Atlanta, Georgia. Charlotte, North Carolina is either just outside of or just
That
inside.
doesn't surprise me because of the banking industry, and
true.
there's so much growth, and the airport hubs
Yep.
in Charlotte are
Spo-
huge too. I think American's airport hub, there's a big hub there.
I'm not sure.
Yeah.
But Spokane, Washington is another that would
Now
surprise
that does surprise me. Spokane, Washington does. Why are they coming out of Seattle? Where are they coming from?
It's seemingly different parts of the country, but mostly out of California. So
So California is going to lose population.
absolutely.
Okay, so that's interesting. Do you think New York State as a whole is losing population?
I'm measuring metropolitan areas, not measured the state, but it would not surprise me to see the state population go down.
The whole state population. So we're not just seeing from north to south, because Spokane, Washington, that's from south to north.
Yes, Ogden, Utah is another city that's high.
Oh, I heard that was high. I have a friend who was moving to Ogden,
Yeah,
Utah.
so, but you're
It's beautiful in
seeing,
Utah.
you're seeing these things, right?
yeah.
And so I feel certain, without doing the research, that in these cities they spend a lot of time and effort and money into producing grids that are technology friendly. So you can go there and you're going to be able to be productive. And I think that's going to be a big separation. If I was recommending what a municipality should do to give it the best chance for growth going forward, it would be invest heavily in technology, invest heavily in the broadband. You need to be at real 5G. You need to be technology friendly and Wi-Fi capable all over your town. This is going to attract professionals to your area.
Okay, so let's do a little prediction on what we think is going to happen in the overall real estate market as a whole. I know I just said markets are local, but give me an up or a down in the next a year from today. Are we going to be higher, lower, or are we going to ride the same out?
Sure. So I think what we're going to find is going to be what's I might call a bifurcated outcome. There's 2 possible outcomes. Both rents and home prices have separated so tremendously from their fundamental value. We can't do that without some sort of financial reckoning. So one of 2 outcomes seems the most likely.
I don't like the word financial reckoning.
Well,
All right, hit me with that. What does
one or
that
two
mean?
outcomes. Areas that are, with the rise in interest rates, areas that are expecting a population decline or very modest increase in population will be hit the hardest in terms of pricing. And so what they will experience, I believe, cities such as Memphis and Detroit will actually see a significant downturn in prices. The other thing that's driving this is they're significantly overpriced. They're pretty high up in our rankings. I don't remember exactly each of those two, but they're definitely top 25, 30-ish, if you will, in those rankings. So they're very much overpriced. They're losing population, and you're going to see a back.
So here's how we do it.
Okay.
If you live somewhere that is overpriced and people are leaving, your housing values may drop. That's what we're thinking.
That's correct.
Okay, so don't buy rental property there is what we're trying to say.
That's probably true.
That's probably a good idea.
That's
okay?
correct. The other outcome, besides a crash, will be, wait a minute, if you're in an area where you're having significant influx of population and this inventory shortage is going to persist, it was a decade plus in the making, it's not going to go away in the next year, we're not going to see a housing crash. What we're going to experience, or what we'll have to pay for, is this prolonged period of housing unaffordability, both in rents and prices.
What we're going to have to pay for.
The trade-off. People are always looking for trade-offs.
Yeah, what's the trade-off?
The trade-off is because we have separated so significantly from fundamental prices and home prices, fundamental monthly rentals, it's either going to be prolonged unaffordability, which you'll see in places like Miami, places like Atlanta, Georgia,
Palm Beach.
Dallas, Texas, absolutely, or you'll see a housing crash in areas such as Memphis or Detroit, possibly Chicago, where you're seeing this slowdown in population and the inventory situation, whether it's handled or not, you're going to see prices decline in those areas.
That is exactly what I've been saying, that first of all, from 2008 to just about 2018, we had a huge shortage of inventory of new construction.
Correct.
Because the market was so hammered, it was hard to get money. People didn't want to buy because they didn't want to take the risk. It takes like 7 years to get a project approved anyway, right? So we had this huge shortage building up in certain areas. And then we throw this pandemic on top where people are like, I'm out of here because, I'm living in a shoebox with 6 other people from paying $5,000 a month for it. So let me go somewhere that's a little cheaper. And they was cheaper, but now it's not cheaper there anymore because they brought their money.
That's correct.
And they kicked up all the prices.
But it still might be less expensive than where you were before in absolute terms
100%.
and relative to your income. Many of the people that are coming here are bringing their jobs with them. They're not packing up, moving to Florida and looking for jobs. They're bringing their profession with them.
It's so amazing to me that for some people, obviously not surgeons or whatever, but that you can just pick up and take your job with you.
To a great extent, that's true.
Yes, anyone who really worked in an office, who really didn't work directly with the public in that location, they pretty much could just pick up and go.
And you're seeing that.
Yeah, you're definitely seeing that. And even though people want you to return to your office, I think that the employers, because of there's not the almost employee shortage or the talent shortage, they're living with it. They're like, all right, work from home.
That's correct.
They're putting up with it.
You're definitely seeing, outside of extending beyond real estate, we're definitely seeing a shift in power, if you will, between management and employees.
Yeah. All right, so that shift in power, that is going to affect the housing market eventually as well.
That's correct.
Yeah. And the commercial market, you guys study the commercial market at all?
We don't do the commercial market.
But just the commercial market pretty much follows the housing market, doesn't it?
It has historically done that, but we have reason, and I don't do research directly in this area, that coupling, that correlation is perhaps going to be broken this time, simply because we have so much commercial space.
And the work from home? What happened to, you know what? I keep saying that they should reconfigure some of this commercial space into affordable housing.
We're seeing that already in
I
South
would
Florida.
so love to see that. So thank you so much for that. And thank you so much. It was great
Thank you. I
talking
enjoyed
to
talking to you.
Thank you for joining us here today at Florida Atlantic University, the College of Business. If you enjoyed this discussion that we had with Dr. Ken Johnson, you can find out more information about the indexes they compile and all the information and research that they do on Go Home TV. On mystatemls.com, go to the Go Home TV section and look for the article.